Hi everyone and welcome to the weekly update with me, Richard Parry, market analyst at Hantec Markets. Each week I'll be taking you through the key events that I believe will be driving your investments in the coming days. Now moving into this week, risk appetite has actually been fairly positive, and that has come on the back that Russia has certainly begun to calm down a little bit in terms of geopolitical tensions, and investors have taken that in positive light. Now, moving into this week, the first real bit of data that's come out amongst a large amount of data throughout the week has been the Eurozone inflation figure that has come out this morning. Now, the impact has been certainly quite significant on the euro so far. The Eurozone's inflation data missed estimates, falling to 0.5%, down from 0.6% expected by the market. Now, the initial reaction for the euro has been positive, actually, and that is a little bit surprising, considering that this data should be negative for the euro. And I think ultimately, once the market begins to settle down, I think this should start to drift back again on the euro. Now, the reason that this should be negative is because it puts further pressure on Mario Draghi and the ECB to possibly ease monetary policy. Now, last week we had Mario Draghi and Jens Weidmann of the Bundesbank come out with comments that suggested that monetary policy easing was still on the table, and that, considering that the Bundesbank had been so staunchly against quantitative easing in the past, this is quite a big turnaround. Now, this puts pressure, I think, on Draghi for his announcement on Thursday, but also the press conference as well. So that is, I think, one of the key bits of data that is certainly driving markets today. Now, forex, as I said earlier, the risk appetite has been improving, and certainly the currency pairs have been pushing higher. The euro has picked up off $1.37 in the last couple of days, and also cable has been pushing strongly higher over the past 5 days. Cable's looking up to a test towards that $1.6716 level, and even dollar yen has begun to move. This has not happened for a while. Dollar yen actually in the last couple of days has been pushing strongly higher, back above 102.83, which is that key pivot level that I've been talking about. And now it's looking higher towards a test of that March high at 103.75. And finally, also the Aussie dollar has also completed a big base pattern as well. So risk appetite amongst these currencies certainly looks to have been improving. Now onto the indices. The S&P 500 has been fairly consolidatory in the last week or so. It's built a trading range of about 50 points between 1834 and 1884, and I think at the moment it's still trying to come to terms with the fact that it's outside earnings season and it needs a catalyst to the upside. I think that may well come on Friday with non-farm payrolls, but we'll wait and see how that pans out. But I certainly think the S&P is looking for a bit of a catalyst now. The FTSE is also sort of in a consolidation mode, trying to break above that 6,643 level. And if it can do that, then it will begin to look more positive. The DAX, however, has been strongly outperforming all these indices, and certainly at the moment, I think that is benefiting from the fact that the geopolitical tensions with Russia have calmed down somewhat, and the DAX is now looking towards a test of that 6,720 level. So the DAX is looking very positive. Now, moving on to gold, the last couple of weeks have been very bad for gold traders, certainly if you've been long, and the correction has dragged the gold price back below 1,300. Now, there are initial signs of a bit of support coming in. You've got the 50% retracement of the big move higher, and that comes in at 1288.13, and also you've got the 144-day moving average, which has traditionally been a very good gauge for the gold price, and that comes in at 1286. So there are a couple of key levels on the downside, and I think that gold might begin to start to consolidate and perhaps even start a basing process. It needs to push back above 1300 and hold above there for this to really gain some legs. But I think certainly gold is beginning to find a bit of a bottom, and I think that could continue through the week. Now, moving on to the key events that are going to be driving driving the markets throughout this week. Certainly, as I said, the Eurozone CPI data that's happened today, but tomorrow, I think the manufacturing PMI data that comes out throughout the day for countries around the world will be significant. Certainly, the big focus will be on China, considering the Chinese data has been so poor of late, and also the US versions of the ISM as well. On Wednesday, you've got the ADP number, the employment report, which could give an indication as to how non-farm payrolls move on Friday. But I think ultimately on Thursday, we're looking towards the service sector PMIs. But again, this ECB press conference and rate decision could be key for the markets. Finally, we finished the week off with non-farm payrolls, which, as ever, has the ability to set the tone for the month. And I think that this could be once more a very key number. Last month it was came out very positively, 175,000, and that included upward revisions for the prior months as well. The recent weekly jobless claims data and also updates such as consumer confidence have all been positive, so this might suggest that we could see a number north of 200,000. I think that's certainly what would give the market a bit of a cheer on Friday. So that's this week, and I wish you good luck in all your trading. Don't forget you can check out all our weekly reports and daily morning reports from our website. If you're on Twitter, you can follow me at HandTechRich. And until next week, I wish you good luck in your trading, and thank you very much.